Hello, everybody, and welcome to this month's monthly update. Let's go through and see what CoreLogic has to say. So, first and foremost, Australian dwelling values. The past 3 months, we've seen national home values, they rose by 2.3% up till October. And this is easing slightly off the June quarter. So still growing strong. Just the growth has subsided a little bit across the country. And the 12 months up to October, the property values have grown by 5.6%. Now, that is really interesting. In spite of rising interest rates, we are still seeing the property market grow. And this is one of those big concerns for the RBA and one of their considerations. Let's keep going. Where we're seeing most of the growth in the past 3 months have been in Perth, Adelaide, Brisbane, and Sydney. Perth has been leading the way. And the 12-month changes, it's a little bit different. Perth still leading the way at 10.8%. Sydney just behind Perth at 9%. Then you have Brisbane, Adelaide, Melbourne after that. Some of the other states and territories have actually seen a price decrease in the past 12 months. Okay, some of the other data that I like looking at are the quarterly changes in the Stratified Hedonic Dwelling Index. That's a mouthful, isn't it? Now, what I like to look at here is the lowest. It shows you what parts of the property market are growing within each of these cities. And it specifically says that the lowest 25, the middle 50, and the highest 25%. Now, having a look at each of the states, you can see that there is a little bit of a trend where the lowest 25% have led the way in Perth, Adelaide, and Brisbane, whereas it is a little bit more mixed across the other cities. I think this is really talking about, with all the interest rate rises, we're probably seeing a flight to affordability, and that's the reason why we're seeing such strong growth in these cities, and particularly in that part of the market. Okay, so I want to skip down a little bit here. So over the past 30 days, across the combined capital cities, we've seen a 0.8% growth. So last month, almost 1%. Growth trajectory for housing values across combined capital cities slowed from a recent peak of 1.3. So it's still growing, or 0.8%, but it's come off from that June peak of 1.3%. Okay, so some of the more interesting pieces of data are here. So CoreLogic estimates a 41,000 sales in October nationally, compared to the historic 5-year value of 45,000. So we're selling less property, but the 6-month moving trend suggests volumes are gradually lifting. So there is still quite a low level of volume, as you can see here. But it is starting to increase again. And that's pretty well reflected across the country in both regional markets and also in the cities, where there's just not a lot of sales compared to the 5-year average. Now, this is an interesting piece of data here, the median days on market. You can see here that the amount of time to take to sell a property is slightly higher through the 3 months to October, with the median days on market being 30 days. So it's taking about a month to sell a piece of real estate these days. And it's less than that in the combined capital cities. So the capital cities really are leading the way, whereas the regional centres are suffering. There's a little bit of vendor discounting across Australia, so you can look to go and get a small discount from the vendors that are out there from the advertised price of about, in the capital cities, about 3.3%, and across Australia, about 3.6%. Now, this here is probably one of the reasons why the listings and the total listings, that's the available stock on the market. In the 4 weeks up to November 5th, new listings totaled 43,400 nationally. New listings have trended slightly higher through the winter into the start of spring, and are now 10.2% higher than a year ago. But this is 5.4% lower than the 5-year average. So we're seeing more listings on the market than a year ago, but still well below the 5-year average. And you can see that here. Previous 5-year average is here. And this is where we're tracking that black line there. So a little bit higher than last year, but still well below where it should be. Total listing numbers is a similar story, where you can see here, this is the 5-year average. We're tracking well below the 5-year average, but we're starting to just touch the similar sales numbers as last year. Okay, new listings advertised are now trending notably higher with most capital cities compared to this time last year. Total listings remain lower than a year ago across Brisbane, Adelaide, Perth, and Darwin. And if you remember that Brisbane, Adelaide, and Perth were some of the cities that have had seen the highest amount of growth. Now, that's just clear supply and demand. There's not a lot of supply on the market, so that means that with the similar levels of demand, the price is going to remain strong. Whereas Sydney, Melbourne, we can see here that new listings changed the equivalent period last year. Listings compared to last year are well above what they were last year. In Victoria, the rest of the state, as well as Sydney and Melbourne. Weekly clearance rates are sitting at about 62. Combined capital clearance rates average about 65%. For the 4 weeks up until October. 65% normally means that it's about a even market. When clearance rates are higher than that, then that's when we're seeing growth in the market. Rental values. Now, this is a really important thing to be paying attention to for you investors that are out there. Australian rent values increased by 0.7% in October. Taking the national annual increase to 8.1%. So nationally, rents have grown by 8.1%. Now, in some cities, we're seeing more than that growth. And it's also important to break it down into the regionals and the combined capitals. You can see combined capitals is actually 9.7%. The capital cities are really leading the way in the rental market growth. Perth is the strongest market, followed by Melbourne, then Sydney just after that. Then we've got Brisbane and Adelaide. So we're seeing some really strong rental numbers in the combined capital cities. Let's keep on going down. Now, this here is some really interesting data that I like to pay attention to. This is the dwelling approvals and housing credit. Specifically dwelling approvals, because approvals tell us how much stock is coming to the market, how much apartments, townhouses, and houses are being approved. And after they're approved, it takes about 12 to 36 months for some of these projects to complete. Now, dwelling approvals fell a further 4.6% in September. For the less volatile detached dwellings series, approvals were down 4% in the past month. So you can see here on the graph that dotted line is the decade average for units. We've been trending well below the decade average, except for a couple of peaks, for the past 6 years. So that's been trending for quite a while now, well below decade average. Now, houses had that slight peak, but quite a significant peak. That was during all the government incentives, the first home builder bonus. But now is trending well below that. So that could just be a correction off this massive peak and it's coming back. But you can say that these decade average, being well below decade average, is going to have we're going to have a problem for supply over the next 2 to 3 years. So this is something to pay attention to, especially if we do see a decrease in interest rates. We're going to see a massive spike in demand. And we're also seeing a huge amount of migrants coming into the country. So lots and lots of people coming into the country. And if we do see a change in interest rates and they start to decrease again, we've got a lot of demand for what we can see here, supply being very low for a long time. Okay, so finance and lending, you can see here that the value of new finance rose 0.6% in September. And you can also see that here, since February, growth in secured housing finance for investors was 16% compared to 6.1% in owner-occupied lending. So we're seeing that investor lending is starting to come back up, which is really interesting. Investors are coming back into the market. They may be seeing the market for what it is, and it's quite opportunistic, where confidence levels are quite low, despite the fact that we're still seeing price growth. There we go. Nationally, investor finance comprised 35.8% of new mortgages through September. The share of investment lending was at its highest in New South Wales at 40%, and it's trending higher than historical average at a national level. So we are seeing that investors are stepping back into the market. Okay, that's about everything that I wanted to cover in this report. I hope you found it interesting. The CoreLogic data is some of the best in the country. I really like going through all of it. If you have any questions, let me know. But some of the key trends that I am seeing is that property prices are still remaining strong. We're seeing that investors are stepping back into the market. We're seeing record low levels of supply. So this is really a perfect storm for price growth over the next 12 to 24 months. And if we do see changes in interest rates and credit becomes cheaper, you can make a pretty strong bet that property prices will see that increase. So happy investing, happy house hunting. Questions, come back to the Wealthy team or myself, and we'll chat to you soon. Bye-bye.